Hi, I'm Dominic Picardo here for Spreadbet Magazine. It's Friday the 6th of July, and today we're going to be taking a look at the outlook for the US stock market, where a week ago we got a very important signal from the point of view of not only long-term investment but also, I believe, for short-term traders. We got a Dow theory buy signal. Now, the Dow theory is one of the oldest methods of charting the stock market. It goes back to the work of Charles Dow, who founded the Dow indices and also the Wall Street Journal back in the late 19th and early 20th centuries. And originally, this theory involved comparing the behavior of two indices: the Dow Jones Industrial Average, that's the Dow that you hear about in the press, and then there's the Dow Transportation Average, which is still around today, but somewhat less famous than the industrials. And the updated version of the Dow theory that I use, called 21st Century Dow Theory, also takes into account a third index, which is the Dow Jones Industrial. So here we've got these three indices. The Dow Jones Industrials, this is the blue and red line here. Then the Dow Transports, that's the black line here. And then the S&P 500, which is the pink line. And this goes back to the market highs back in the spring. And we got a sell signal in very early June, when these markets crashed through their previous lows of the middle of May or so. But since then, what has happened is the markets have rallied, formed a bounce, then they've had a pullback, and then they've at least in the case of two of them, have broken through their previous highs, and that creates this Dow theory buy signal. The markets are now said to be in a primary uptrend. And the reason this matters is primarily to do with the record of the Dow theory. Dow theory buy signals typically have given way to gains in the S&P 500 index over the last 60 years, of about 5% over the following 3 months, and then over the coming year, an average of about 15% or so. So clearly there are some good gains to be had after these sort of signals, and as a result, even though I've got a lot of doubts right now about what's going on, I've got doubts about the US economy, clearly of concerns about the future of the euro, also about China and its bursting property bubble. I have to say I am respecting this signal. I've been looking this week and for buy trades in the US markets, and will continue to do so. We'll have that sort of bias as long as we have this Dow theory buy signal. But the next thing I want to have a look at is targets. How far might the S&P 500 index rally from present levels? And here we've got a slightly different kind of chart for the S&P 500. This is a point and figure chart, also a very old and venerable method of charting the markets. The beauty of it being that it gives very objective, very unequivocal targets and other signals. And this point and figure chart is pointing to a target for the S&P 500 of just over 1440. So it's a fairly decent upside for the short to medium term, if that's the time frame we see these gains on. So that's the sort of level that to me is a credible target if this uptrend now is for real, and I am going to treat it for real until we have any sort of evidence to the contrary. The other thing we need to look at is the intraday trading levels, because both the Dow theory and point and figure targets like this obviously apply to periods of weeks more than sort of trading for a few days at a time, such as we're most likely to do via spread bets. So what we're looking at here is a 4 hourly chart of the S&P 500, and this is one of the main ones I use for tracking the markets intraday and timing my entries. And you can see today, after the disappointment in the US jobs numbers, the S&P has sagged through this line, which is once again one of the key lines that I use in my own personal trading strategy, the 55 4 hourly exponential moving average. So we've dipped below here, but nevertheless, I am still treating this now as a correction. When the market is below this line, then I become more cautious. I shift to a sort of neutral position. But what I think could happen in the days ahead is something a bit like what we saw back here earlier on in June, where once again this line gave way quite dramatically, but then we saw a strong rally back above this line, which began it really got underway here, and thereafter it didn't look back. So what I'll be looking for at the moment is for this thing to find a bottom, maybe after becoming oversold on this 4 hour chart, and then bouncing back through that line. And that to me would be a reasonable moment at which to try and join the uptrend. But in the meantime, I'll be back at the same time next week, and good luck with your trading in the meantime.